Firstly, I just want to say what an amazing privilege it is to be here, and I'm really excited by that. And there are three reasons for this. And the first is that I usually spend my days going around talking to bankers, and we all know that everyone hates bankers. So in my travels, I've been to Occupy Wall Street. I've seen the Occupy St. Paul's, and you may not know, but there was for a time a very brief Occupy Zurich, and being Swiss, it was very neat, and all the little tents were in neat little rows. And in my conversations with these Occupy people who all hate the bankers, none of them could really comprehend that. When one goes down to, I'm originally South African, so I have a certain interest in the country. When one goes down to a remote part of the Eastern Cape, and one sees people lining up in front of cash machines to get their government pensions, old people, and then running the risk of getting robbed on the way home, or getting home and their sort of sons or son-in-laws taking their money away and going to spend it on booze, and these women then being given a card with the money on the card, and turning up at a shop and sort of digging in their tops and taking out a card instead of taking out cash, and actually being in control of their money. And so it's really exciting to be at a part of financial services where people actually see value in what is being done and really love what's being done. I mean, I guess the second reason that I'm so excited to be here is that we just have amazing people with amazing experience in the field. I was at a different forum yesterday with some regulators, and one of them made a rather astute comment, which was, in banking, judgment comes from experience, and unfortunately, in banking, most experience has been bad. What we've got here is a group of people who've really got the good experience, the experience of getting things right, of doing really positive things rather than just going from crisis to crisis. And the third reason I'm so excited is that this is not just a talk shop. We've got people who are not just bringing their experience and insight to bear, but actually have a roadmap, as Sherry so beautifully summarized. A real roadmap that says, how do we get from the situation we're in today, where people don't have access to financial services, to really stepping out the pathway to getting there. So I think let's try to keep that roadmap in mind during this conversation. We have brilliant people on the panel. We also have brilliant people in the audience. So I'm going to really ask you to take part. I want to see hands waving. I want arguments. I want contributions. I want agreements and disagreements. So, I'm going to take frequent breaks to ask for your input. But if I'm not, just wave a hand and wave it vigorously, because I'm staring into the lights. I may not see some of you. But first, I'm going to. Well, Sherry's been introduced. Tony spent much of his career working on financial inclusion at McKinsey, as well as the World Economic Forum. You've had some involvement there. Jean-Claude has told me earlier that he's just recently stepped down from being governor of the Central Bank in the DRC. Did that job for 16 years, he says, without a holiday. So he's been enjoying a rather short break before getting back to this important work, and has been involved in financial education and financial capacity building, both at the Russian ministry as well as in the G20. And Stephen has had the privilege of leading Visa's initiatives in this field, and I'm sure you can tell us a bit about some of the examples that Sherry mentioned earlier in terms of actually rolling out product. But I'm going to turn to Tony first. Why a roadmap? I mean, do we need one?
Well, I think the roadmap's important because we should think about financial inclusion as a market failure. So there's certainly the demand and there's a capacity to pay, but for multiple and complex reasons, the supply has not developed. And so the roadmap, to a certain extent, does the root cause analysis that says, what is it that is impeding these markets from being developed? And if we're going to serve people at scale, as Mrs. Blair so aptly described, we're going to have to really address those barriers on a country-by-country basis to let the flow of investment, to catalyze the innovation that's going to be required to really serve all these people.
Jean-Claude, I'm going to bring you in, because you've got the distinction of actually having led the regulatory changes that have really led to considerable change in your country. And I just wonder what the main insights that you'd take away from that experience are for regulators, and perhaps also whether any of the roadmap principles really applied in your case.
Absolutely. We did not have a roadmap to start with. But I am surprised, amazed to see that what we have done actually follows that roadmap. And I would like to encourage other regulators to follow our path, because what we have done is, first of all, to put up a solid and financial banking system or financial system, which we did not have. Just to give you an idea, hyperinflation, dollarization, depreciation of the currency and so on, this does not bring trust to those who provide financial services. So we started there. And then with innovation being VSATs, to have access to transactions being booked online and so on, so that introducing the mobile banking also provided opportunities for those who were not banked. And these are very important steps. And the most challenging thing that I have seen, or I've lived through it, is coordination. Very, very difficult to get coordination. Government does not necessarily understand what we're doing in the financial business. So they will not be supportive if they don't understand it. So that coordination with the providers of services as well. When we set up regulations, well, we went to the stakeholders, say, hey, this is what's happening. We want to be supportive. How can we help? And that's the way we move the whole thing forward. And we'd like to push it even further forward. Thank you.
And how seriously, when you're talking with both your government or other governments, how high on the agenda is financial capability and education? Do people see that as a priority?
Yes, I think that for the last few years, the situation has changed very much, and it's increasing interest, not only interest, but commitment of governments. We have, for example, 45 countries in the world now which developed or in the process of developing national strategies for financial education or financial capability. It's a huge amount of countries. And some other countries also have pieces of financial literacy, financial capability within financial inclusion strategies. And we also have now more than 40 countries in the world which set targets, national targets for financial inclusion. And financial capability, financial consumer protection are also parts of those strategies. So I can say that we see a huge growing interest both at national level in particular countries, but also at the global level within G20, within G8, within APEC region, some other global platforms. We see that, for example, I was really surprised when I spoke at a finance ministers meeting about financial capability. It was real interest, and finance ministers of G20 discussed those issues which you could expect ministers of education would discuss. But they really understand that it's not only matter of education, but it's matter of financial stability of their countries.
Technology plays a sort of major enabler in this, and I just wonder when you look at the roadmap, sort of is that in your mind given sufficient priority, and is it the game changer that the roadmap assumes it becomes?
I think there's no doubt that it is one of the game changers, technology. Whether it's mobile, whether it's biometrics. That technology is, and the way in which it facilitates interoperability of networks. Technology is, I think, well acknowledged within the roadmap as having a major part to play. But I don't think it's the only thing that is the game changer in here. And I guess we look at the roadmaps and think about this as being fundamentally a shared framework for collaboration. I think this is what the roadmap really sort of brings to the table. It offers an opportunity for all of the different stakeholders to take a look at what we need to do collectively. As Jean-Claude said, there may not be anything particularly new in any one element of this, but the fact that it's brought together into one sort of document, under one framework, is incredibly important. And I think it's that framework that is going to enable stakeholders to be able to point to how to come together collectively, even if the collaboration, as Jean-Claude said, is going to remain quite a challenge.
and if collaboration is the key issue, what are the major barriers to collaboration? I'm willing to give anyone a shot here. Who wants to? Why are we not seeing the collaboration, Anna? I appreciate it.
Well, it's interesting. We just last week we had a G20 meeting on financial inclusion in St. Petersburg, and we discussed the same topic. And we, as regulators, policymakers, discussed how to engage private sector into collaboration. And here at this forum, we discussed a lot how to engage governments, how to engage regulation. You see, it looks like it's maybe like a man and a woman who want to meet but don't know who should make first step.
We need some internet dating going.
But of course, there are some issues. First of all, I can say from government side, from what we discussed, that it's possible conflict of interest. Speaking about financial education, for example, how to engage private sector that it will be no conflict of interest, that it will be not sales of the products, but really financial education. But also, I think it should be both ways. It should be, as we voted here, that financial capability should be incorporated in products, and it's one part of the story. But of course, to deal with private sector, we need some rules. And we actually developed now, together with the OECD, some kind of code of ethics, how we will cooperate. But of course, the private sector can say their own concerns or barriers probably to cooperate with governments. But I am absolutely a supporter of coordination and cooperation, because I agree no government, no private sector, no other sector or stakeholder alone can resolve these issues.
I think it's pretty well established that uncertainty diminishes investment. And so having a clear set of rules that everybody understands can enable both the investment and catalyze innovation. And so I think even more importantly maybe than collaboration is the idea that it will take innovation to really serve these people with everything that they need, and that we need to come together and create the conditions in which investment and innovation will occur.
How does one do that?
Well, I think it is going back to this idea of doing the root cause analysis. And one of the things that there's a lot of discussion about is using information and doing it in a way that's beneficial to the customer, that they get a chance to opt in. But with the increasing use of electronic devices in their daily lives, the thing that's most different, even from a few years ago, is now the availability of this data, both in terms of what their needs might be, but also in terms of the economics of serving them. And so I think it's imperative that we create, kind of rules and guidelines and so forth, and encourage the use of data to really be able to bring cost-effective financial services to people, and do it in a way that people opt in and they find beneficial.
We're going to come back to that. Jean-Claude, I'd sort of come back to you once again, staying on this coordination and collaboration issue. Did you have to bang heads together to achieve what you achieved? How did you manage to get everyone together?
My head was banged as well. No, but it is very difficult to convince the various bodies of the government to think together with one objective. Let me give an example. In DRC, we have a growth rate of 8%. From a macro point of view, very happy for the last 3-4 years. Very happy. But the poor guy at the bottom of the pyramid doesn't feel it, doesn't see it. So how do you fill that gap from top to bottom? That's the challenge. And this needs to be explained to the government, to the stakeholders. Let's do this together. And that's why I really appreciate this roadmap. I will go back and say, listen, here's what we call in French a fil conducteur. You have some orientation. You have that roadmap. And it's very important. So I believe that if one can sell this idea and people understand what the final goal is. When I look at the video, it was a lady, a woman, in a village, very far away from the capital city. And how do you service that? How many women are in the agriculture in Africa? They are the ones doing the agriculture. So if you can make a difference with those women and other groups so that you can make an impact on development goals, then you make the link. Then the government will understand. And I think that's the way to go.
Do we need to go beyond just having a roadmap and principles to learning from other bits of banking? So I'm thinking here the Basel Committee or the groups of supervisors that sit down in IOSCO and those places, where they don't just produce sort of principles and roadmaps, they actually produce sort of genuine guidelines on best practice that various countries sign up to and adopt. Do we need to go a step further? Would clear rules that are adopted across countries be helpful?
We actually do it already. We actually do it as GP5, Global Partnership for Financial Inclusion. We work closely with global standard setting bodies. And I can say that we conducted a conference together. We discussed how to incorporate financial inclusion in their standards and their guidance. And for example, this year, FATF already decided that financial inclusion will be in their long-term agenda. And they also defined financial exclusion as the risk for integrity. So, and they provided new guidance on that. And other standard setters also move on. But of course, it's very important to see how these global standards can be implemented at national level in different circumstances. So that's why we think that, for example, G20, this year we submitted for our leaders a set of financial inclusion indicators, which first time included financial capability and financial consumer protection and mobile technologies. But then the question is how to set these targets at national level, and it's already what you just said, that it's how to put this achievable, simple, goal or target which can be achieved. And I think that it's in this particular area we can do more together, again, private sector and governments, and we can create more global platforms which can assist those countries, especially with low capacity, to help them to achieve these goals. But standard setters sure should play even more active role in next years, and we have this plan, but roadmap can be very useful for that.
Stephen, we've been talking about clear rules and setting the framework for investment. I mean, you're not a non-profit organization. You invest where there's an opportunity.
Sure.
What, as a sort of profit-making enterprise, what are the key barriers that you see, and how far does what we've just been discussing go to alleviate some of them?
Well, I think the first thing is to acknowledge what was talked about yesterday, which is that there is undoubtedly a big market opportunity out there. I think it was assessed between something around $3 and $6 trillion in cash still in payments around the world at the bottom of the pyramid, and it's growing. So the market is there. The question is how we need to adapt our business models in order to be able to address that market, and how we need to adopt our behaviors in order to work with governments and other partners collaboratively to address that. And I think the biggest obstacles, honestly, are us internally, having the vision, looking far enough ahead to be able to sort of make the right kind of trade-offs in terms of investments now and decisions, in order to be able to recognize that the payoff over time is going to get there. One of the things that we've done over the last sort of 3 years at Visa is we created a partnership with the government of Rwanda about 3 years ago. And this was a really sort of holistic, it was a way in which we sort of challenged ourselves to do something very differently. It was to say, if we're going to as a business to really try and get into the business of helping solve financial inclusion at scale. We've got to find a way in which we can adapt our products, our business models, other solutions, the way in which we behave, and think about this in a whole completely different way. And we tend to spend a lot of time in Africa looking at the right kind of country and the right government with whom we could work to do this. And Rwanda bubbled to the top of the list for lots of different reasons. And we created a partnership there which has been largely successful. 3 years we've established a payments infrastructure with them. About 40,000 Rwandans are now sort of educated in terms of financial literacy. And we develop products which now sort of meet some of the end needs of the consumers in the market. But this has been it's been a really interesting but challenging process, both for us and the government, to sit down and figure out how we interact, how we collaborate, what the lines of working together sort of look like. But we think that in doing that, there are some really sort of valuable lessons that sort of brought about how you drive that kind of collaboration forward, potentially for other countries in the future.
I'm going to turn to the floor here, and are there any questions or comments? And excuse me for shielding my eyes, but let's. I'm sure there are some contributions from the floor. Okay, we have a hand to the left. Very good.
My name is Subaro. I was governor of the Reserve Bank of India until 2 months ago. Sometime during the discussion, there was a question about whether the Basel Committee of supervisors and regulators is sufficiently sensitive to the question of financial inclusion. I've participated in those meetings over the last 5 years, and my own takeaway is that they're not sufficiently sensitive to financial inclusion. My impression was that all the discussion in the Basel Committee was informed by advanced economy concerns about how to make banks safer, raise capital, raise liquidity standards, reduce leverage. What was not realized was that this is going to raise the cost of credit. This is a big problem for emerging and developing economies because the cost of credit is going to go up at a time when credit is going to be more important for generating growth. One question that usually comes up is, all right, why don't emerging economies just not follow Basel III? But that's not an option. Although in theory, Basel III says that you can comply, or if you do not comply, you can explain, not falling into global standards is not a realistic option. Take the case of India, for example. If we say that, look, complying with Basel III is going to be costly, we're not going to comply with it, the world is not going to condone us. No foreign investor will come to India because they'll make a judgment that India is not following global standards. So not following global standards is not an option. And following global standards is an expensive option. So my message or point is that the Basel Committee or the international community of standard setters is not sufficiently sensitive to financial inclusion. Thank you.
Thank you. I thought that was a really valuable contribution. Are there any other hands? And once again, wave them vigorously. Is there someone? Right, and yeah, that side. Thank you. Thank you.
Thank you. My name is Yemi Dada from Nigeria, originally. You've talked about compliance and regulators. Can you share with us some of the problems you have with the regulators regarding setting up these things? Because it's good you give us good ideas here. When we go back to implement them, we begin to find difficulties in the area. It's nice to know that we can see dream again, even though we fail, because we can learn from the mistake that we've got. Thank you.
Thank you. I'm going to stay on the floor for this because there are. Is there another hand there? Great, thank you. And I'm also, while the mic is moving, I'm going to invite 12% of you are regulators. I'll invite someone from the floor to answer this last question about what the institutional barriers are from where you're sitting to to implementing these.
So I have a question for Cherie Blair, and that is, it's back on the partnerships theme. Because you gave so many examples of partnerships, and yet we see that partnerships are quite difficult to establish, and both with government and among providers. And so what are your insights on the key partnership success factors? What makes it work and what doesn't it?
I'm going to take one more if there's another hand. Otherwise, no. I'm going to turn over.
Yeah, while you're doing that,
Yeah.
I don't mind. I think that actually there is a willingness from governments and from the private sector to engage in partnerships. I actually think that it's the third sector that sometimes is actually more reluctant to engage in partnership. Now, I have been working, and we've heard some examples, when I set up my foundation, one of my aims was to try and say, I don't want to do things that other people are already doing. I would rather work with those people who are already doing those things and help them take them to scale. But the reason I did that was I was 10 years in Downing Street, and I did a lot of work, because I was married to the Prime Minister, with the NGO sector, the charity sector in my country in general and internationally. And I found time and time again that people would be doing good work over here and people would be working in the same area over there. But there was a real reluctance to share. And I think this is something that the NGO sector needs. We need to be a little bit more confident, not only in ourselves, but in each other, and work out that we're so much better if we collaborate together and share lessons together. This isn't a zero-sum game where everyone's chasing just one narrow pot. But actually, if we work together, we could actually increase the pot and increase the number of people that we were serving. The other thing that always struck me was that we need to be a bit more careful about evaluating projects, because sometimes what you could have is one project which is doing something, and then when the funding from that funder stops, it goes on, the same project then goes and looks for another funder, and it goes on like that without ever actually stopping and saying, well, have we reached the end of this project? Or is this project actually achieving? Or what can we, what funder A doesn't share their results with funder B? And I just think that there is a need also from the voluntary sector itself to be a lot more open to collaborating and a little less fearful that collaboration means annihilation, if you like. So I think that's something that we really need to be conscious with. And I suppose that would also apply to the private sector here. I mean, we've got Visa represented on the platform here. I know MasterCard, I voted actually on that, about the whole thing about payments and identity cards, and partly because of what I heard yesterday about what MasterCard has achieved with all that. And I think that, we have to understand that we have to work together, so that actually there's absolutely everything to gain from Visa and MasterCard, who obviously do compete, actually working together on this issue. It would be a great thing. Government departments you're talking about, I've worked with some governments in Africa too, and there's a huge tendency, well, I also know from my husband's own experience, he wrote about it in his book, isn't it? Even when you're Prime Minister, to get the system to cooperate to achieve your goals is not as easy as you think. We're very inclined to work in silos, and what roadmaps like this and conferences like this are all about is trying to break down those silos and getting us all to recognize that if we can work together, truly work together, we can all benefit. This is not a zero-sum game. We can actually all get something out of this and increase the benefit for everybody else as well. So that's, I don't know if that answered your question, but that was what I wanted to say.
At risk of slightly changing the subject, and we're going to come back to some of the other questions from the floor, but just while you're speaking and warmed up, your particular interest in women and the promotion of women's issues on the agenda, as you mentioned, women are particularly disadvantaged in this space. And I just wonder whether, how does one sensitize the decision makers? Is it to women's issues? Is it about trying to get more women onto the sort of boards and fora that are discussing these? Is it about making firmer commitments?
Well, I think it's all of the above. But at the heart of this is the cultural change that needs to come out. And we started this session, didn't we, with that sign. And we all laughed that in 1877, or whatever it was, the High Court was saying you cannot, in any circumstance, give a loan to a woman. Now, I can tell you as a lawyer, that was because a woman, a lunatic, and a child were all regarded as incapable of entering into contracts, and that was the legal theory behind it. And so therefore, if you entered into a contract with a woman, you couldn't enforce it anyway, because you can't enforce a contract against someone who's incapable. But in 2013 in the UK, when we have, 12% women on board? I mean, it's a pathetic figure. When we still have 20% women in our parliament as compared to the 60% that they now have in Rwanda, when we have only one woman on our Supreme Court, we have come a long way, and we must acknowledge that. But we still have a hell of a way to go, and it's about breaking that culture that somehow assumes that women just can't quite pass the mustard, yeah? And, that's not true. And we have to do something to work on that, because that same attitude, which in 1870s said women are children and therefore you can't give them a loan, is the same attitude which is saying now in Africa or in India, don't give your daughter a mobile phone. I mean, there are examples of this in India. Don't give your daughter a mobile phone, because if she does, she'll be able to make her own friends and indeed choose her own husband. Shock, horror. So, there's a huge cultural change that's coming on, and what makes a difference? Certainly, it makes a difference to have, as we have here, we've got an inclusive panel, we have women in the audience. Women need to be seen and heard, and there are still too many conferences around the world where you're not seeing a proper representation of half the population.
And I see you nodding. Was that a request?
I just
a nod or
want to say that, first of all, I absolutely agree. And we had worldwide survey shown that almost in all countries, women are less financially literate, but also have less confidence in themselves. So this is also a big issue. So if they have more empowerment, they become more literate, and they make really important, sound decisions about their life. And that's why also within G20, we've chosen this year women as one of our key target audience. Together with IFC, we launched the website for women, a web hub for women entrepreneurs. And also we learned the barriers which women face in access to finance and access to financial education. But I agree that more practical initiatives and projects should be done. For example, we within G8 are going to support some African projects too. But also I see that most of national strategies on financial capability include women as one of key target audience. I think it's really important to have more sustainable policy on that.
I'm going to abuse my position here and run two more minutes over. I'm being shouted at. There's one very important issue that I want to ask Jean-Claude to address, which is the two people on the floor said the Basel Committee doesn't take this issue seriously. It's worried about financial stability. Someone else said, how do we go home from this conference and talk to our regulators about this? Do you have any quick response on both of those?
I do agree with the gentleman when he talked about the Basel Committee. Those things help, but it's very difficult to implement all those recommendations or regulations in our countries. Maybe because the financial system or the banking system is too small. We don't have the competence. We don't have to go to all those details, because it's pretty much detailed. And I agree with him. But those things help. so that you make sure that we're in a global economy. We have to make sure that we don't miss out. As far as the regulators, the problems that we are facing, we have to be very careful about over-regulations. It is very, very important. And this applies to different countries differently. I'll take my case. The country is so huge. The capacity at the central bank to supervise all those institutions takes time, takes a lot of money, takes a lot of dedication. Those are the challenges that we are faced with. So you need to find regulations, I would not call them friendly regulations, but supportive regulations, so that we can help each other. Maybe financial institutions can help the central bank regulate on the ground, so that we don't have to do that work. Somebody else can do it. Subcontract it, maybe. Maybe that's the word, the correct word.
Thanks, John. I think that a lot has come out of this, a lot to take into the following sessions. I would like to ask you to join me in thanking our fantastic panelists for their really interesting conversation.